D7 here with Grok Trade. We're going to spend a few minutes together here, and I hope to not bore you. That's my big chore. Taking a look here at the spiders. That's S&P 500, ETF, and sure enough, as we talked about last week, expect a drop, and we got that drop. Frankly, I pulled a significant amount of money out of the markets on that drop. Very fun week for us. And anyway, Friday we had a bounce. You see this nice bull pullback with a bounce. A couple things that I don't like about this is on the bounce is this is not a nice controlled bull pullback like this. You see this is a controlled bull pullback. We get a reversal pattern and then a pop, and then you get a nice run after that. This is a choppy, messy, mutt-looking pullback. I don't like these as much. And volume is sketchy to me. We do have a pop on Friday, so that tells me we have a really good chance of 1 or maybe 2 days of bullish activity here before we run back into these resistance lines that we talked about in last week's video. Okay, this is a daily chart, but what I'd like to do is go over here and look at a weekly chart. If I check out a weekly chart, and I'm using at this moment Trading View. We have no affiliation with them other than the fact they hook us up with some charts, and this is my dog down here trying to get in. Hold on. Here you go, Walter. You can go in. So I'm in my townhouse doing these videos. I mean, I have an office down in the Sykes building downtown Tampa, and for the life of me, I don't know why I'm not doing my videos there in the Sykes building. It's the Rivergate Tower. It's the only building downtown Tampa that looks like, they call it the beer can building. I call it I'm from the Midwest, right? Indianapolis. So I call it it's the grain silo building. It looks like a grain silo. Largest limestone building in Florida. Interesting, useless fact for you. Anyway, but I'm here in this townhouse before, I'm trying to wait for these markets to drop before I buy the house. But man, these are insane prices. I just refuse to buy at these elevated prices in real estate, especially here in the Tampa area. Weekly chart on the spiders, rally up, up, up. We smashed our head last week at resistance, and sure enough, it's acting as resistance, and we end with a tweezer top. That tweezer top is quite bearish, and we have kind of a hanging man reversal pattern, and a kind of a bearish thrusting pattern too. A lot of reversal patterns here. Really good chance of a drop commencing. It just looks really good to me. MACD is getting ready to cross over. You can see this here if I blow it up. See how the two lines, the MACD line, the signal line, are getting ready to cross over. You can see that by the smaller tick on the histogram. So when it crosses over, the negative histograms will go to the positive histograms. And then when it crosses over here, these positive histograms will go to negative below the zero line. These ticks are on a zero line. And the bigger the histogram tick, the wider the two lines are apart from each other. So it shows strength or power. And the thinner it is, the closer we expect a change to happen. So this is looking quite bearish on the weekly charts overall. You can see this here. Best option we have here is for us to base sideways, build a nice high base, and then rally up and then just crash through those. I think with the debt and inflation problems that we have, it's a very real issue. We're just going to have problems there. The month, I mean, we're a couple weeks into the month. It might be worth looking at. Let's just take a look at it. The month, a couple months ago, September was nasty, but this, I mean, we did, October, we come rallying back. November, we're showing these new highs again. But if you look here at the MACD, I want to show you something. MACD went up, crossed over. See the negative histogram here, negative histogram. But then we're crossing back up, a positive one. But we're heading higher here. The MACD is heading lower. That's a bearish divergence. Not good. It's not a good setup to see that. So it's showing a lot of weakness here. If you look here at the RSI 20 just shows us really, really, really over this area. I have the band set around 70, so we're over that area. It's just looking very toppy to me, guys. Very, very toppy on the monthly chart. Anything can happen. We got a couple more weeks here in the month. anything can happen. But back on the daily charts, diamonds daily, it's a nice pullback. I don't like the candlesticks getting larger. You see how they're systematically getting larger bodies going down? That's usually a bad sign. I don't like that. Also don't like that we're heading up here. Let me show it to you. We're going higher here, but going lower here. Do you see that? So whatever this is doing is what this will do next. So this one gave us a lower swing high. Expect a lower swing high to happen. This could pop up a bit here and then drop, and if that happens, you'll have a shoulder, head, and shoulder. Shoulder, head, shoulder. And then it will drop here. So we look very toppy on the daily charts. NASDAQ cues just a horribly dog-ugly pullback, and then it tried on Friday to rally up. But that rally is suspect, as far as I'm concerned. Very, very suspect. Bounced around 23.6 fib. That's what all these horizontal lines are. I'm going to get rid of it. But as long as we stay above the moving averages, the 20 and the 50, you know, we should be okay. But it's just looking very, very toppy to me. Small caps I really pay a lot of attention to. So look how the bodies are getting larger coming down. Don't like it. We do have a bullish harami on Thursday, but then we pop up. Why didn't we get a big monster bullish run on Friday? We just did not. Actually ended with a red candlestick, but bullish for the day. It's just not good, guys. Not something I'm interested in, you know, buying and being big time long in this arena. Financials, on the other hand, looks really bullish to me. Can anybody tell me what that formation is? We go up, up, up in this formation. Extra bonus points for anybody who can tell me that technical chart formation. There's a website, free online tradingeducation.com, that you can go to the chart school and look for the different charts if you need help and assistance there, because this pattern is one of those patterns at free online tradingeducation.com. So tell me what that is, and tell me if it's bullish or bearish. And yeah, let's go over here to US dollar on the daily. Look at this. We got a big time jab. We come down here, come down, boom, jab, and then rallies. That's what jabs will always have, an immediate, very impressive reversal. That's what those are. We come up. Now we got a reversal pattern. It looks like we're getting US dollars getting ready to come down. If so, then it'd play well with gold and silver. Speaking of gold and silver, wow, they've been on fire. Silver's up, up, up to the races. Look at this. Silver daily chart. We got past that resistance line. We pulled back, pop. We do a little bull pullback. Boom, up. We're hitting our head at a major area. This is the 200-day moving average. We hit it. Look, the axis of support there. We break it there. We act as resistance there. We're right there at it again. So I could see this pull back again, just like this time. See how it pulled back? If it pulls back again and then rally up past it, I could do that. If you look here at gold, another jab. We come up here, and then, no, it's not really a jab. Just got to get my line right. No, this is, okay, we come up, boom. Let me make sure. Okay, yeah, I'm good. There and there. All right, I'm good. And then we come up, we stutter step with the doji right here at resistance, and then we plow through straight up. Very, very powerful. Very nice move. You know, it's building a high base. Building a high base. That thing could go a little extended. We're very extended to the upside, guys. Not liking what I'm seeing on the MACD, the RSI. I'd rather have it pull back before I look for thing of interest. VIX keeps going lower, lower, lower. Thursday and Friday, we just go lower, lower, lower. VIX is big time in complacency type area, I guess. It's just low. I wouldn't say complacency. You know, that's around the 12s. But, I mean, guys, we're below 16 on the VIX. That's unbelievable. We're right at 16 at the VIX. Really, really unbelievable. For you Bitcoin people, you know, we're heading up there. I'd like to draw a line that's of importance to me that I'm seeing in my head, but I want you guys to see it drawn out. Is that right there? Support. We're on the wrong side of support here. If I draw another line from here to here, we have a rising wedgie, and that's breaking down. So on the daily chart on Bitcoin, this tells me we could be topping out here for a while, and we'll start heading down and giving some back. So those are a couple thoughts for you. That's it for now. Okay, so I digress by talking about housing, but housing is a very real issue. Housing, finally, the house prices, real estate starting to tick lower, I see, with the different reports coming out. Here, I'd like to open up a discussion for us. We have an inflation problem. We're at 6.2 now. We were at 5.2, then they came out, expected at 5.2, it came out to 5.4, and now we're at 6.2. Inflation is here, and I don't think it's going anywhere away soon. It's just not going anywhere soon. We have a problem on our hands. Turkeys, are you kidding me? Are you guys able to find turkeys? They're saying there's a shortage now. People who are building homes or trying to build homes can't find supplies still. You know, we're way out. I had hail damage. I'm still waiting on windows to come in. Hail damage was back in the early summer. Still don't have windows in my previous home, my rental. And it's just insane, right? So one of my businesses is real estate business, and we're flipping some, wholesaling some. Now we got a multi-unit that we own, and I'm needing place for my institutional endeavors. I need monies to be going into real estate, and that's why we have that company now. But my issue is, the problem that I'm seeing is, for being a home buyer, is I wanted to rent because I didn't want to be buying something at an exorbitantly high price. You know, like if I was looking at the housing market on an RSI indicator, I'd be, technically it's an oscillator, you know, an RSI oscillator. We'd be way overbought for real estate, especially if you're in a destination area like we are here in Tampa. Just exorbitantly high, naturally, intrinsically, and, you know, just because the conditions of the markets, relatively speaking. Now, the idea was, I know we're in a 12-month or a 12-year bull rally, so we're due for a 2 to 4, 5-year pullback. So it's going to feel horrible. It's going to feel like there's blood in the streets. It's going to feel bad, recessionary pullback. You know, big pullback. Because what I mean by that is, markets in 2000 went up 5 years to, or in 95 went up to 2000. That's 5 years up. Dropped 2003, 3 years later. We rallied back to 2008, okay? So that was another 5 years, 2003, 2008, another 5 years. And then we pulled back, 8, 9, 10, you know, we pulled back a couple of years there. Things that dropped fast, bounce fast. That dropped really, really quickly, the financial pop in 8. So within, 2 years, we started rallying back. We started heading higher again. But we... the people where your money was in 2000, we call it the lost decade. By the time you get, we're around 2013, 13 years later, you finally were at break even again in the markets, where the markets finally came back to where we were in 2000. And then we've rallied higher. Now we're up 12 years. We're really long in the tooth. Usually the markets go up 5 years, pull back. We're up not 5, not even 10. We're up 12 without a significant pullback. That's in the markets. Now, some people argue, hey, man, COVID, it was a pullback. We rallied up higher. Did that let the steam out, to decompress things so everything's equal again? I don't think so. I don't know, but I don't think so. I think that was a fluke anomaly. It was a black swan event that took place and quickly healed itself to come back to align itself back with the metrics of the economy. Okay, that's what I think was what happened. But the question is, on real estate, is what should I do? It'd be interesting for you real estate people out there to give me your opinion down in the comments. I'd be really interested in hearing this. And substantiate your thing. Let me know if you are a real estate investor, if you're in residential, if you're in commercial, and how, let me know. I mean, if you only have one house sitting out there and you have an opinion on it, that's fine. But if you got 200 homes out there, or you've got multiple commercial places, I'm really interested in the big investors telling me what your thoughts are. But should I buy now? The reason I'm thinking should I buy now is a home here in Tampa is because of a couple things. Number one is what's going to happen to interest rates. Interest rates are very, very, very low right now. Interest rates are only going to tick higher. So what's the money going to cost me if the interest rates tick up 2, 3, 4, 5, points? That's a big difference, right? The cost of that money and the opportunity to get that money at such a unbelievable interest rate, under 3s. I mean, that's unbelievable. That's what I'm hearing. I'm hearing right now the latest is you can get under 3s on even a 30-year fix. Are you kidding me? That's unbelievable. My home in Indianapolis, I got years ago, got a 3.6 on that, which is pretty good. But under a 3 for a 30 fix, unbelievable. So the idea is to circumvent the idea of having to, let's say I wait for another 1, 2, even 3 years, then finally the markets give up the ghost and crash and burns. When that happens, the markets will soften for real estate too. Everything will drop. With inflation, what you're going to find is people won't be able to afford, because all their extra income will get squeezed with inflation, and they're not going to be able to afford those higher price homes like we're seeing now. Because the affordability, people are buying them, demand always meets up to, or supply always meets up to demand. And that's what we're seeing in the marketplace now. But once the demand softens because of inflation, it's going to increase our supply quite a bit. And we're going to see a softening of market prices. So in the real estate arena, when that happens, I thought that would be the time to purchase the house. But I do that at a monster risk that what I could, to buy that home, the interest rate could be double or triple in 3 years. I know it sounds crazy, but could we be at 6 to 9% in 3 years? The answer is 100% yes. In my humble opinion, and I'm not an economist, I'm an enthusiast, okay? Surrounded by a lot of other enthusiasts when it comes to the economy. Those are just some thoughts that I personally have. So it's really interesting. So my question, I guess, is for you investors, should we buy now while money is cheap? Even in the face of having a relative strength of being in an overbought levels, technically speaking, as a trader. It's just hard to buy. For example, buying Bitcoin at, to load up on it. No, it's actually a horrible example for many reasons. I can't even believe I brought that up. But it'd be like, having a stock that has a peg ratio that's PE over growth. PE over growth just gives you an idea of if something is overvalued or undervalued. You want PEs over 1. I'm getting geeky here, guys, but PEs over 1 or pegs over 1 means you're overvalued technically. And what if you had a peg ratio of, say, 1.5 is okay. I'll even invest in companies that are up to 2, peg ratios of 2, if they're warranted, right? Because the growth can be subjective. I'm going too deep. But what I would like, so with that understanding, what if we look at the housing market, and the housing market has a peg ratio of 8, like something stupid overbought, or overvalued. And should you buy there just because money is cheap and you're in a destination area, which I am in Tampa, and the chances are when the markets do soften up, this market may not, just because we're not a typical area, just because of the great beaches that we have here. I don't know, just some thoughts. It'd be interesting. I'm crowdsourcing right now by even opining about the idea of this concept that I have, because several of us in my immediate circles here in Tampa, we're just having this discussion now. And because one thought I thought is, maybe I'll buy a home that's got plenty of square footage I'm looking for on the water or near it, but it's just junked out. I'll reno the thing, dump a bunch of money into making it what my wife and I want it to be, and but but we run into the problem with laborers, just having the labor to do it and then the materials to do it. The two most important parts of getting it done. If we can't get turkeys for Thanksgiving, are you kidding me? And I hadn't had windows, and I can't tell you how long. It took me forever just to get, those other materials on the building. So it's just crazy. It's a crazy time in which we live. I'm really interested in your thoughts. So my 10-minute technical analysis video turned into a vlog of me droning on and on about whatever my mind's thinking about at any given moment. I don't know. Are you okay with listening to this sort of stuff? Is it of any interest at all? Or should I just stay to the technicals, say, here's what I see in the charts, and goodbye, and keep my videos down to 5 minutes so you can get through them quickly? So, man, you guys are just crazy to be sitting on here and listening to me for this amount of time. I don't know. We'll be crazy together, okay? Something I'm thinking about doing is, I just haven't set it up yet, and I shouldn't even bring it up if I don't have any destination for you to go. But I am looking to put together something that it's only for accredited investors, meaning net worth is more than $1 million. But you got to exclude your home, right? Take your home out of it. Do you have a net worth of $1 million plus? And because I have some techniques, some strategies that might work for larger accounts. And I thought, we'll do it in a little exclusive group. But the problem is I can't open it up publicly because I can't legally do so. It can only be accredited investors or qualified. A qualified investor means your net worth is $2.1 million or more, not including your main residence, or you're making at least $200,000, $300,000 a year. There's a couple of criteria on if you qualify for accreditation. But I'm really thinking about putting that together. And because there's some things that I'm doing and that I think would be beneficial to you guys. I just can't share these techniques publicly. And anyway, I'm just thinking about doing that. If that's something that'd be of interest to you, just let me know, and I may put something together. We'll do like a Zoom or something. Probably a Monday, I'm assuming. Tuesday's racquetball, Thursday's racquetball. I could even do a Wednesday. I could even do a Friday. Man, that's sad in your life, and you got Fridays open. That's so sad. It's hard when you move to a new location like we have, it takes a while to build your circles of friends. It does take a while, but we're enjoying it big time. But anyway, that's it. Guys, take care. If you like it, leave me a comment, share it. Man, you do my heart really well if you share the video. We always appreciate that. Take care, guys. We'll see you. Bye.